One of the most pertinent would be to establish a properly capitalised state-owned investment bank of the sort that all of our G7 competitors already have, to do something to move our investment share from being one of the lowest in the G7 to one that was moving upwards instead of going in the wrong direction. We've called for that bank to have an initial capitalisation of around 40 billion over 4 years, for it to support infrastructure and SME investment, and for it to be something that really could be set up relatively quickly. I know that we were asked to reflect on ideas that have already been discussed today. There's been some discussion whether RBS could be mobilised for that purpose. That's something that I think is worth considering, but my view has always been that there's also a risk, because RBS is a bank that was set up for a very different purpose. Changing a bank that was set up for one purpose into a state investment bank overnight, when it still has a huge amount of bad debt on its balance sheet and a huge network that's focused around fulfilling a very different role, is challenging, and that may or may not be the best way to go. But I think we need to recognise that isn't just a simple answer to establishing such a bank in the first place. There's been lots of talk about reducing the size of the banking system. I think that the best way to do that is through growing other sectors of the economy and reducing the relative share of finance. I think I probably disagree with mandatory reduction in the size of the finance sector, as was discussed on some of the slides earlier on. Maybe a graduated banking levy that would mean that as banks got bigger, they had to pay a higher proportion of their income in tax might be one way to try and have some impact on the relative side and the number of very big players in banking in the UK. And definitely we need to do far more to encourage far more diversity, whether that's regional banks or co-ops and mutuals and credit unions, as have been talked about today. But I am here as a representative of the TUC, and there are lots of employees working in these very big banks, so just breaking them up and throwing them all out the window without a thought to the terms and conditions of the thousands of frontline bank staff who didn't do anything to cause the crash in the first place isn't something that comes without its human consequences. And I think more broadly, again, I have to admit I haven't been here for the whole day, so I don't know if this was discussed, but corporate governance more broadly is one area that I don't think we discuss enough, and I think we should talk about more. As I mentioned, the TUC has done some work looking at how people can become more active in directing fund managers to vote on their behalf in their investments, but that's only one part of the story, because in the UK we have a system of corporate governance that's based on shareholder primacy. The assumption is that shareholder interests and the long-term interests of the company are always the same. Well, when you have a situation where very large amounts of UK equities are held by overseas investors, where people are holding shares so they can short sell the stock and make a gain when the share price goes down, when you have very large numbers of shareholders holding shares for some of the largest companies, thousands of them in one place, there's a question as to how effectively that system can work, and also as to whether shareholder interests will always be in the same as the long-term corporate interest. So we've called for measures that would broaden out the UK's corporate governance system, including worker representation in board structures, looking perhaps at a first step as worker representation on REMCOMs, but also 18 out of 27 European countries have got worker representative structures through their corporate governance structures. Maybe that's something we need to start looking at now for the banks as well as for other businesses. I suppose the most immediate thing I would do would be nothing to do with the banking system. I would look at some sort of fiscal stimulus programme to boost demand in the economy, which I think is a prerequisite for all sorts of wider improvements and changes that we need to see. But specifically on banking, I might be minded to increase the capitalisation that's currently being provided to the State Investment Bank the government and Vince Cable have set up, and look at giving that bank borrowing powers so as to increase its scope to fund the infrastructure and investment that we're going to need as we try and rebalance our economy in the years ahead.